All right, welcome back, everyone. Lead trainer with StocksToTrade, Tim Bohen here. Want to talk today about the morning fader pattern. What's the morning fader? It's one of the hottest patterns out there right now. And what's great, what I absolutely love about this pattern is number one, well, many things. The first one is just the fact that, especially if you're new to trading these crazy volatile stocks, it's really dangerous to make impulsive decisions and pile in as soon as you see the news hit, as soon as it spikes up big, particularly in pre-market. And listen, pre-market's scary. Now, as I always say, feel free to trade in pre-market, but the big delineation is, can you stick to a stop loss? Okay, and actually I'm gonna double back to pre-market trading a little bit, because what's great about the morning fader is it solves all this. But one thing you'll notice, and maybe you fell into this trap with pre-market trading, is you chase a move. Listen, PHIO, I'll get into it in a second. News drops at 7:45. You chase it up, and then it sells off. You get stopped out, and then the stock ultimately makes the move. And the biggest danger, and this is why I want you guys to be cautious. Now, again, if you're experienced, this doesn't apply to you, okay? If you can stick to a stop loss, if you can write a trade plan, follow through, take that stop and be like, okay, no problem, I'll move on to the next trade, then trade in pre-market. But what so many people fall in the trap is they trade at 4 a.m., 5 a.m., and they fall into this mental trap of, they chase a stock, it collapses, now they're in a loser, and they sit there and they're like, oh, well, it's only 5 a.m., well, it's only 6 a.m., maybe some news will come out, maybe someone will pump it, maybe it'll squeeze. And actually, let me know in the comments if you fell into that trap. And I think that's one that a lot of people fall into. They get this idea that, I'm just gonna bag hold because maybe something will happen. Maybe there'll be an 8 a.m. press release. Maybe there'll be an 8:30 press release. Maybe there's a 9 a.m. chat pump that will bail me out of this position. So if you're doing that, don't trade in pre-market, focus on morning faders. Now, if you're not doing any of those, fire away in pre, but still trade morning faders because it's the best setup and the best pattern out there. So that being said, let's get into why PHIO was just an absolute box checker from that perspective. So we're gonna work through the list here. Take some notes, okay? Number one, PHIO, right off the bat, many time former runner. Okay, so it's a former runner. We're familiar with this name. And why do former runners matter? The idea behind former runners is the market is made up of people. Okay, it's made up of traders. And stocks that have ran in the past tend to run again. Listen, as soon as I saw PHIO on the Gapper scan, after that press release, I'm like, whoa, this is number one or number two for the day, because I knew the name. And now, when people ask, next question I'll get probably in the comments is someone will say, could you get me a list of former runners? Doesn't work that way, okay? The way you understand and grasp former runners is by showing up to the market every day, whether you trade or not, running your scans, tracking your data, and you build a mental database, okay? I can't just give you a list of 1,000 stocks, and even if I did, it probably wouldn't help you, okay? You need to be in the markets every day, again, for the second time, whether you're trading or not, tracking the biggest runners of the day, putting that in a spreadsheet or an Evernote like I use, and greasing that groove and cementing it in your brain. For me, I saw PHIO, I'm like, here we go, top one or two of the day. So why did PHIO jump up? You can see 7:45 a.m., they dropped a press release, which has a lot of the stuff we like to see, okay? Gene technology, blah, 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 blah. We don't get too in-depth into the PR, but you can see, subcutaneous squamous cell carcinoma. I'm not a doctor, but I did stay at Holiday Inn Express last night. Like, when you get this kind of buzzwordy stuff, that's what we like to see. Now, for day trades, okay, they'll screw it up. They're a penny stock. They will never succeed, okay? But we got tumors in here. We got phase 2 cohort. We got a lot of good stuff here, okay, to get people excited, because that's all we care about from a day trade. So 7:45 PR drops. Stocks instantly goes from $1.50 to $300% move. then starts to grind around, chop around, do its thing, go back to what I said at the beginning of the webinar. Then what we look for is exactly what it did after that initial rush, that fade into the market open. Now, the other reasons, this was a box checker, puny float, okay, couple million in the float, and it was trading, let me look in pre-market. It's easiest just to go to a 1 hour chart. So that initial press release hits, it trades 5 million shares, then 27 million shares into the open. So we got 30 million shares traded, which gives us 15x float rotation. Now, I've got a lot of videos discussing float rotation, why it matters, what it means. It's a very simple calculation, okay? All you do is divide the day's volume by the float, and the higher your multiple, the more you should care about this stock. The biggest float rotators almost always, day in and day out, become the biggest movers of the day. So the higher float rotation you have in pre, the more this stock moves up your list. Then we got a press release, we got a former runner, and we have a morning fader pattern. So from basically 8:30 to 9 a.m., this stock just trickled lower, 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 lower into the open. That's what we want to see. What that does is, particularly in these low float stocks, it attracts short sellers, okay? That fading action, because they're convinced this stock is going to collapse at the open, they cover into that, which is fine. Listen, we know a lot of these pre-market runners do collapse at the open. But if you have Oracle, you add Oracle into the morning fader, well, now you got an advantage, okay? So when this stock didn't fail at the market open, instantly became my number one of the day, okay? And you can see right here, actually, let me get over here to the alerts, and I'll go there, and you'll see that at 9:33 a.m., the instant the Oracle signal dropped, I alerted this at the Oracle signal, okay? So I mentioned this for a couple reasons. First reason is, all I did was take the entry signal from Oracle. All of you can do the same, okay? A lot of people are like, how do you pick these Oracle stocks? Listen, that signal came straight from the algorithm. I didn't make that entry up. I didn't create it. I didn't have to do any technical analysis. I didn't do anything. I just pulled it from Oracle and sent it to members of the daily income trader system. A lot of the members did the same without even getting the alert from me. That's what I love to see. So when you get these morning faders and they don't crash into the open, you simply wait for the signal to hit, set your stop loss. In this instance, it was $4.39, and then extrapolate your goal from there. Now let me show you Oracle on PHIO. Right there's the 471 signal, dropped 3 minutes after the market open. Actually, I think it dropped a little earlier. That was by the time I got it typed up. Actually, I want to say it hit 9:31 a.m. So let me zoom in on that so you can see it right there. 9:31 a.m., early signal from Oracle at 471. Now, the reason I sent it at 9:33 is it takes time to type, right? Okay. But if you had Oracle, you would have known precisely at 9:31 that this was the top low floater with a morning fade pattern, and you knew exactly where to buy it. And then if you use my 3-to-1 risk to reward methodology to map out stop losses and goals, you were in the money almost instantly. So let me get a 1 minute chart. I normally use 5-minute charts. Let me jump over here to a 1 minute chart. It hit 471 at about 9:34, never looked back, and ripped as high as 979. Now, I'm not saying anyone, now I saw some people hold it to the 8s. I was like, geez, oh Pete's nice diamond hands. Most people sold in the 5s and the 6s. Absolutely great stock trade. Now, if you're extra aggressive, I mean, it kind of went straight vert all the way up here until the 9s. Now, again, 979 high day. By no means am I saying anyone should have held that long, but think about it. Think about the risk to reward on that trade plan. You've got a stock with about 32 cents of risk, okay, with, at this point in the day, almost $5 of upside. That's the type of risk reward we look for. You sell in the high fives. Like I said, maybe you get more aggressive. You sell in the 6s, the 7s, the 8s. Okay? Think about that. That's how you grow your account. Because the other way, what's great about Oracle is when you lose small, right? You follow the plans, you use the tool, you lose 30 cents a share. Nobody likes to lose, but it's part of trading. So let's say PHIO hadn't worked, okay? You lose 30 cents a share, depending on your position sizing, which I also teach, okay? When we build these trade plans, all of you should have a number in your head that you're willing to risk, a dollar amount per trade. You have that dollar amount, you can look at the trade plan, and then you can calculate the number of shares you'd be trading, okay? All of these things, all of these concepts I teach in the daily income trader system every single day, live twice a day, okay? But when it comes to risk management, entries, exits, finding the best stock, looking for the hot pattern. Listen, the morning fader didn't exist 6 months ago. This is a new pattern. So as these new patterns emerge, if you're in the daily income trader system, you knew about them 6 months ago when we first started trading. You're not just hearing about them for the first time on this video. So risk to reward, position sizing, entries, exits, stop losses, and goals. We use the box checking philosophy to look for the low floaters with news and former runners, all those criteria. You can use all these materials to nail stocks like PHIO every single day. So that being said, my friends, I put out a bunch of videos a week, 2, 3, 4, 5 videos, but the best way to identify these in real time, you could have been on that webinar this morning when we mapped all of that out live. Hundreds of traders absolutely crushed PHIO because they're in the daily income trader system. If you're interested, just hit that link below. You'll get a free sign up to go to a webinar that shows you everything involved. If it's right for you, you can jump in and join me every day, twice a day, mornings and afternoons. Haven't missed a day in 10 years. Nobody's there for you like I am. Check out the Daily Income Trader System.